Ladies and gentlemen, good day and welcome to Rushil Decor Limited earnings conference call hosted by Asian Markets Securities Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bhatia from Asian Markets Securities Limited. Thank you, and over to you, sir.
Thank you. A very good afternoon and welcome to the Q1 FY23 earnings conference call hosted by Asian Markets Securities. From the management side, we have Mr. Rupesh Thakkar, Chairman Managing Director, Mr. Rushil Thakkar, Executive Director, Mr. Keyur Gajjar, CEO, or Mr. Hiren Padhya, CFO. I now hand over the conference to Rushil Bhai for his opening remarks, and then we will open the floor for question and answer. Over to you, Rushil Bhai. Thank you.
Good evening, ladies and gentlemen. Welcome to Rushil Decor Limited's earnings conference call for the first quarter ended June 30th for the financial year 2022 and 2023. I would like to begin by thanking you all for taking out the time and joining us today. I thank Asian Market Securities for arranging this call. On the call with me, we have Chairman and Managing Director of the company, Mr. Rupesh Thakkar, CEO of the company, Mr. Keyur Gajjar, and CFO of the company, Mr. Hiren Padhya, along with the Bridge IR, our investor relation team. In the quarter, several positive points emerged for Rushil Decor. The ever-increasing experience combined with an excellent team delivered one of the most fabulous results for us. Both of our segments, MDF and laminate, contributed to the growth of the company. The MDF segment showed a very significant growth in terms of EBITDA and overall profitability with capacity utilization. We have been striving to increase the capacity utilization at the AP plant, and at the same time, we are focused on reducing the cost and increasing our efficiencies. Our dedication for achieving the higher utilization and efficiency has been paying off, and we have been crossing our own set milestones, which reflect in this quarter. Our other focus has been to gradually increase our exports and enhance the value-added contribution. I am delighted to state that our strategies has been satisfying. The overall exports recorded substantial growth in terms of value and realization both. Now we plan to move into the next leg of the growth, for which the board has approved fundraising of rupees 200 crores. I would now like to thank the entire team of Rushil Decor as well as our stakeholders whose faith and efforts enable us to stay focused and generate better results. I would like to hand over to our CEO, Mr. Keyur Gajjar, to share his expertise on the industry and other aspects for quarter 1, financial year 23.
Thank you, Rushil. You have given me a head start with an informative opening remark. Taking a cue from him, I must say that we are delighted that our commitment of sticking to our set plans to achieve short-term goals has been paying off. Both the segment laminates and MDF perform exceptionally well. As for laminates, we achieved capacity utilization of over 84% in the quarter under discussion, and we achieved the highest turnover in a single quarter. We also achieved the highest volume of MDF in this quarter. The utilization of MDF at the AP plant stood at 73%. We have set target in terms of higher capacity utilizations and increasing the value-added contributions, and we are to the extent quite successful. We are pretty sure of this witnessing improvement going forward. This quarter can be considered to a benchmark and try to achieve bigger milestone. In terms of raw material pricings for specific chemical, we are witnessing stable or I would say downtrend, leading to low cost pressure. In terms of import competitions, we believe that current level of pricings and high freight costs would make import less competitive on and off exchanges. That is all from my side. I would like to hand over the call to our CFO, Mr. Hiren Padhya, for his opening remark. Thank you very much.
Good evening, everybody, and thank you, Kevin. I'm happy to share that we crossed a significant milestone with the turnover crossing with 200 crore in the single quarter. We'd like to state that in the same quarter last year, we witnessed the second wave of COVID, and also the Andhra Pradesh plant had just commenced operations. The MDF segment contributed about 76% of the top line. This was on account of higher volume sales. At the same time, the exports also witnessed significant growth and improved realization. Laminate segments too contributed the top line growth with almost 65% revenue flowing in from export for this segment. Here again, export realizations witnessed marked improvement vis-à-vis last year. In order to achieve higher bottom line growth, we were focused on improving our EBITDA margin. We focused on increasing the capacity utilization, higher realizations, and overall cost optimization strategies have paid off for us. Also, exports were adding an advantage, contributing their bit for incremental EBITDA margin. We are working on further on these two strategies and working on a plan to achieve higher efficiencies. EBITDA margins from MDF segment stood at 27.45% and overall EBITDA margin was 22.55% in Q1 FY23. The interest costs were also under control. The above factor led to a very decent bottom line growth. I would just like to highlight in terms of profitability, if we have comparison from 2021, 2022 and Q4 22 versus Q1 23. In case of MDF, we were at 11.62% EBITDA margin, which has grown to 20 plus in Q4 22, and in the current quarter we have reached 27.45%. Similarly, in case of overall margin, 10.43% in 2021 to 16.18 in Q4 22, and in the current quarter it is 22.55%. Same trend has followed in terms of PAT also. PAT was 4.09% in 2021, which has now become 12.91%, with almost 3 times the PAT which was there in 2021. That is all from my side. I would like now request operator to open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Rajesh Kumar Ravi with HDFC Securities. Please go ahead.
Hello. Yeah, hi sir. Good evening. And congratulations on very good set of numbers and also on a detailed presentation segment-wise. So I have two or three questions. First, on the operating side, the laminate margins appears to be subpar. While asset turn seems to be quite in line with the industry 2x. So first, what is the views on the laminate margin improving north of 10%? Second, coming to the MDF, what sort of top line you're looking at for FY FY23, and the strong margins seems to be playing out as we have been guiding, the share of value-added products to increase and higher utilizations. So, given this context, the 200 crore fundraise which you have announced, could you explain what is the need for that? In my view, that would lead to 15% plus dilution. Correct me if I'm wrong. And what is your average borrowing cost?
For laminate, we believe that now the pricings are quite stable, and exports, if we talk about US dollar, it's little bit volatile. So we see that in coming days, the performance may improve.
Mm-hmm.
If you compare our last quarter to this quarter, the things are changing, and now I believe that in coming quarter, because the craft and lot of raw material cost is coming down.
Just to interrupt, like when I look at your competitors' numbers, most of them are reporting margins north of 12, anything between 10 to 15%. Is it because your product mix is different and that is why your margins are impacted, or are there something else?
Yeah, because our product mix is little bit different. We have a business model wherein we have some products which we export to Gulf region, some products which we exports to Far East, Southeast Asia and Europe, and some products in domestic market because of our product mix.
Okay.
But now we see that the raw material for several product mix is changing, so we see positive in that part.
Okay. And coming to the MDF and fundraise part.
See, in case of MDF, you are just asking for the top line which we are just targeting for the financial year 2022-23. That is what I think I understood, right?
Yeah, FY23, what sort of top line you are looking at? Is it feasible to deliver a 50% growth on volume growth on last year numbers?
See, as per our budget, there is a definite increase in terms of revenue, in terms of value and volume both. The quarter one result is already there, so I think we'll just follow the same trend. And on the side of margin also, the improvement in terms of margin compared to last quarter, that is Q4 versus Q1 FY23 is already, I think, available with us. And then our target is like to maintain this margin throughout the year.
Okay.
Okay. The last question regarding that fundraising part. See, as of now, board has approved the fundraising in terms of value. It is up to 200 crore.
Okay.
Now, the exact shareholding pattern, etc., would be decided once we decide the exact value. So as of now, we have decided the limit. That is 200 crore. So within a couple of weeks, we'll just decide the exact course of action, what amount we are just going to have in terms of this right issue. The right issue is basically for the purpose of not any specific expansion. We are just planning to, the core objective of this particular right issue is to reduce our debt. Our total focus would be for this current financial year would be reducing debt rather than investing into any new project as of now. Of course, currently we are also evaluating a couple of proposals for the long-term expansion also, but this particular aspect is basically for the purpose of reducing debt. Now, on debt side also, as of now, for this particular quarter, we have reduced debt to the extent of almost 15 crore. And if we just follow the pattern in which the loans schedule is already there, so we will reduce at least 50 crore during this particular financial year. Over and above, our thrust and the strategy is like, rather than going for any further expansion, we'll just focus into reducing debt. So as a one part, we'll follow the schedule which is given by the financial institutions, including banks. Second would be we will just whatever amount we decide in terms of right issue, we will try to reduce the date.
Mm-hmm.
So our basic focus would be reduction on date.
Okay, sir. And what is the average cost of borrowing you have? And I remember you had mentioned that it is around 7-year long-term borrowing that you have.
See, we have a couple of finance institutions, including banks, the local finance, local currency finance, as well as finance in foreign currency also.
Okay.
Foreign currency, the finance cost is hardly even 0.85%.
Mm-hmm.
And if you see, overall finance cost would be in the range of 6.5% around.
Okay. If I can chip in one last question. See, what I understand, even if your Q1 EBIT numbers are replicated for the full year annualized, that itself would give you 200 odd crore sort of EBITDA. And if would that not be sufficient to help you reduce debt? Because this year I don't see there are any major capex, or am I missing something?
No, I think your observation is perfect. See, as of now, as I said, two specific targets is like adhering to the schedule, and we'll just use the right issue for this particular purpose. The third thing that you are mentioning is already in our strategy, but I think rather than saying anything, we'll just wait for next 2 quarters.
Mm-hmm.
And if we can continue with the same performance, or maybe we can improve on it, then I think we can further reduce the debt out of this margins which we are targeting as of now. So I think you're right. But we will take a call maybe after 2 quarters.
Okay. Great, sir. All the best. We'll come back in queue.
Thank you.
Thank you. Our next question comes from the line of Vivek Gautam with GS Investment. Please go ahead.
Yeah, congratulations on a very good set of numbers, sir. So my question is, sir, how sustainable are these numbers and how much is the capex coming in MDF sector in India on South India? So would it lead to margin pressure? For example, I heard that Arctic Ply is coming up with new plant, and second is about the import threat as the freight costs are also coming down. And what will you say about it?
Hi. First of all, if you put up any MDF plant, it normally takes 2 to 3 years. So it's not very, simple that it starts from tomorrow. But if we talk about the MDF CAGR, annual growth, it's almost 15 to 20%. So by the time this all capacity, if we put up around 1,000 CBM per day and they are putting up, by the time if we talk about existing rate of 6,000 CBM consumption pattern, then also, this capacity will be easily absorbed in the market. Yes, I do agree when there is a new capacity in the market, there is a time being little bit pressure, but over the period it got settled down. In this MDF market is so far not mature market, I believe. So we have still a huge potential to add up the capacity. So that's not a very big issue. And I'm not sure whether Arctic Ply is coming in southern part. That's still I'm not sure. But yes, one part of century is there in southern part. I hope I have cleared this answer. And for what was your second question?
What about the import threat from Sri Lanka, China, Vietnam, as the freight rates are also coming down? And so does it mean ours is a sort of a commodity play or not a commodity play?
Yeah, to the extent it is commodity. When we talk about the non-value added products, it's a commodity products. But there are 2 reasons. That's one of the 2 reasons. That's why importers are hesitant to import the material. One is dollar volatility, and second one freight. Because by the time you place the order and at the time of booking of container, the things change. Today the freight of Malaysian port is now 1600 CBM, and probably 1 month before it was 800 CBM. So there is a lot of volatility in freight segment also. And, a lot of importers, they try to import few containers and they ended up paying 10% more than what we are selling in local market.
So how long will this continue, and what is the opportunity size for MDF and laminate, and what is the CAGR
For
you
laminate,
expect?
it's okay. For laminate, we really don't see any import competition. MDF, yes, we see import competitions, but in laminates, there is no import competitions. And it is very difficult to say but we don't see any such issue in this quarter because, imports, this entire logistic chain is disturbed. So we really don't see in this quarter or maybe even next quarter, the freight will go substantially down.
And what is the opportunity size for MDF in India and especially in South India and where the two plants are located, and what is the growth rate you expect?
As I said, we are expecting the growth rate almost between 15 to 20% annually for MDF product. And we talk about panel industry in general. MDF contributes maybe around 20%, 30%, not more than that. And 70% is contributed by plywood segments. We see huge opportunity in that terms, number one. Number two, there are a lot of, organized furniture makers and startups are coming up. And these people, they normally prefer MDF rather than plywood and other panel products. So we see a huge opportunity. And third part is Gulf and African market. We also see a huge possibility to export our material. And a lot of places today we have replaced Thailand and Vietnam in Gulf region.
Mm-hmm. So overall, this is basically secular growth story, not a commodity play, and increasing exports are also helping us out. And the second overhang was about the debt part, which is you are taking care through the right issue, and how much will be the debt equity ratio post the right issue, and the major concern goes away of overhang, which is leading to lower price earning multiple for our stock.
See, as I said, we just have not decided the exact value of right issue. So I think that will take us some time. And once it is, I think, decided, we'll just come back to you with all the other details.
Okay, sir. Keep up the good work, sir. Thank you very much.
Thank you.
Thank you. Our next question comes from the line of Manan Shah with Moneybee Investment Advisors. Please go ahead. Mr. Manan Shah, your line has been unmuted. You can proceed with your question.
Hello, can you hear me?
Yes.
Yeah, hearty congratulations for a good set of numbers. I wanted to ask, what sort of capex plan do we have for the coming 2 years?
As I said earlier also, except this right issue part, I think as of now, we have not finalized the long-term capex. So we are already having a couple of evaluations in terms of the next project, but so far we are not finalized. So I think at the right time we'll just inform you.
So we would be going ahead with this rights issue once we finalize that plans, or irrespective we would be going ahead with this rights issue?
It will be too early to say as of now, but
okay.
I think this would take another couple of weeks.
Okay. Secondly, one of our competitors in their call had hinted that they foresee inflation in our raw materials. So are we also seeing a similar situation on the ground, or if you can just throw some light on that?
Manan, actually, we see that at present the chemical price is quite stable.
Okay.
Really don't see any changes in near future. So to me it looks like chemical price will be more or less in this range only, or maybe it might go down.
Okay. So there is no risk to our margins going down. Rather, it can go up if the chemical prices go down.
I said there will be a little bit of price pressure. Then in that case, this low cost of input will definitely help us. And secondly, we believe that, we are also putting up some resin saving technology also now from this quarter. So this will be also help us to save some costs.
Okay. Then, if you can just highlight what was the value-added volume from both the units for the quarter, and what sort of target utilization are we planning for the MDF units?
If I talk about in general value addition, we have almost reached to 29% now.
That's on a console level.
Yeah, in general level, because
And for the Vizag unit?
Hmm?
For the Vizag unit, that would stand at?
See, for the Vizag unit, we can say it's almost like 10 to 12% at present.
Okay. And what sort of utilization are we targeting for the year?
As said before in my call also, we are planning between 75 to 80% of our capacity for the Vizag.
Okay. Any particular reason why we are not targeting on the higher side?
No, I said there is no, it's a new plant, and every time there is some plus or minus, we have some, installations, or like as I say, we are now working on resin saving technology. So we have to, put up this machineries and all these things. But I think we don't see any problem even if we can reach 85%, 90%, it's not a problem. I don't see now all the plant, everything is working in full-fledged manner.
Okay. Okay. And then on the laminate side, historically, if I see, we used to make around 10 to 12% EBIT margin. So how soon do you think we can return back to those margins? Have we taken any price hikes on the laminates as well as on the MDF? If you can just, that would be my last question here.
No, once again, I would repeat that you said about the capacity. As I said, that our goal setting is 75 to 80% to achieve, but I'm sure we can go further more. As long as laminate margins are concerned, yes, we are working to improve this margin. Though March was, a financial ending, and now it's the first week of June. So in March, there are a lot of sales took place. So first quarter for laminate was little bit slower. But now we see that because raw material price and everything is coming down, or maybe to the extent they are quite stable. So hopefully we'll come back to our good margin levels. In terms of capacity, we have achieved a good capacity, almost like 83% in laminates. And even in our realizations also, it's quite better compared to, Q1 22.
Any price hikes that we have taken?
No, sir. There's no chance of taking price hike at present. As I said, chemical price and raw material price are quite stable, and some of the chemicals and craft papers and all these prices are going down. So we don't see any change.
Okay, thank you. I'll come back in the queue.
Also, we are working on products mix, so hopefully we can come back to the good.
Sure. Thank you.
Thank you.
Thank you. Our next question comes from Deepak Poddar from Sapphire Capital. Please go ahead.
Hi, thank you very much, sir, for the opportunity. So I just wanted to understand, you spoke about the improvement in capacity utilization in Vizag plant as well. So what sort of revenue growth, CAGR we may look at over next 1 to 2 years?
So as we are rightly discussing, we'll be doing the projected growth of 15 to 20% as the industry standard says. So coming up to these 2 years will be the same.
Okay. But ideally, FY23, the growth should be much higher, right? Because we are coming from a very low base in June, and we are already grown by about 130% in the first quarter itself, right? So to grow at 20% for the entire year, the remaining 3 quarters will see a degrowth, ideally, which I presume will not happen, right?
Yes, I think what you are saying is right. Rushil has given the conservative figures, but then so far I think the way we have placed as of now, I think we'll just try to continue the same growth which we have achieved in the first quarter.
Try to achieve the same growth which we have achieved in the first quarter.
Yes. But overall, I think what you are saying is right. It will be more than 15 or 20%, or maybe more than that.
Maybe more than that. Okay.
Yes.
Fair enough. Yeah, that's it from me. Thank you very much. All the best.
Thank you.
Thank you. Our next question comes from the line of Nikhil Gara with Abacus AMC. Please go ahead. Mr. Gara, your line has been unmuted. You can proceed with your question.
Yeah, hi. Am I audible?
Yeah.
Yeah. Hi, sir. First of all, congrats on very good set of numbers. Sir, firstly, if you could help me with the volumes at our Bangalore plant and AP plant for the quarter, please.
So from the Chikmagalur plant, the volume was roughly about 20,000 CBM. And from the Andhra Pradesh plant, the total volume for Q1 was roughly around 28,000 cubic meters.
Sorry, you said 28.
Sorry. In total, I would say for the month, for the Q1, it would be around 19,000 again. And for the AP plant, it is around 40,000. So overall, if we calculate the total consumption, total capacity utilization, it's roughly about 58,700 cubic meters.
Understood, sir. And sir, could you help me with the EBITDA margins at plant level for both the plants, please?
Okay. So far, both the plant is concerned in terms of Chikmagalur plant. Chikmagalur, I think you just want both the plants separately. That is what you are asking, right?
Yes, sir. Yes, sir.
So in Chikmagalur plant, it was around 32.22% EBITDA, and in AP plant, it was 24.55%. And if we consider average, it was around 27.45% for MDF business. And for laminate, it was 6.5%. So in general, entire, it was 22.55%.
Understood, sir. Sir, specifically, when we compare 4Q versus 1Q, and when we look at the volumes that we have achieved, I think it's like at similar levels, if I can say. So we did 54,000 odd and 59,000 in this quarter. What has changed from 4Q to 1Q that we are seeing such a sharp swing in our margins from 15% to 27, 28%?
Well, number one reason was, if in Q4, it was a final quarter of 2021-22. And in that year, we offered annual promotional schemes to various customers. And that's one of the reasons why we have to issue a lot of, incentives to those people for that financial year. Now in this year, we have no such scheme for annual incentive kind of a thing, or TOD or target, something like that. This was one of the reasons. Second reason, export realization has substantially increased. And
I would like to add on
capacity utilization is also there. If you consider last quarter, last financial year, and this financial year, we have obtained a good capacity numbers. So quite a lot, in margin increase because of those 2-3 main reasons. Yes, Surendra, please continue.
Okay. See, overall revenue has already increased. That is one part. But then the value addition product, the composition is also, I think, one of the reasons, I would say. And lastly, the efficiency of our AP plant, which was there last year, and compared to that, I think Q4 was already improved. And it is every quarter we are just improving in terms of optimization of cost also. In terms of factory overhead, specifically power, water, etc. The costs which are there in the last couple of quarters, we are just further improving in that overhead. So overall, if you say right from 16% to 22% EBITDA margin, the over and above the incentive which we suggested, and efficiency and overall increase in revenue.
Okay, sir. So in terms of, I think we have shared the domestic and export data for 1Q. would it be possible to share for the same for 4Q and the margins, if how much it has changed from 4Q to 1Q on domestic and exports front, please?
So in exports, the margins for Q4 and in Q1 has a growth of 5%.
Okay.
And overall, if we talk about total local and exports together, we took a jump of roughly 3.58% in total from Q4 to Q1.
It's margin improvement you're saying from 4Q to...
It is a realization.
Increase in realization.
Percentage compared to last quarter, we are comparing it with Q1.
And so how much that would have moved our margins from 4Q to 1Q in exports and domestic?
So when we are asking for exact margin, I think we are just not having that data in terms of domestic and export separately.
Okay, sir, I'll take that offline. So, sir, just on the question to some of the previous participants, when we look at our run rate in MDF, which is close to now 60,000, and while you maintain that the utilization would be close to 75 to 80%, when we see the entire scenario of MDF right now, and since a few of the other peers plants are yet not commissioned, and there's only one player who's there and who's already operating at close to 100% utilization, why is it that what is stopping us? Is there not enough demand right now in the market that is restricting us to this sort of utilization levels, or is there something else to it?
In fact, if you see capacity-wise, we are quite increasing. Like we have almost reached to 76% in general.
Yeah, I will just give you simple
Q1 figure. And as long as utilization level is concerned, no, it's not like that. If you see our exports, 7,000 to 11,000 Q4 to Q1. So it's not a restriction that we cannot supply the material and all. We are actually a 1-year-old player as long as AP plant is concerned. So now we are entering into various places like North India, South India, East India, West India. And slowly, gradually, you can see our volume growth is also there. So that's only the reason. We really don't see any hindrance or any other reason.
Over and above, I'd like to mention, if you see the plant which was originally a plant to be commissioned before this COVID only, but actually the operation we can consider is like 21, 22. So the first year only we just achieved overall capacity of 56%. And in the Q4 FY22, we had achieved almost 70%, right? And in the first quarter only, again we are just increasing to 73%. And now, as I said earlier, we will definitely increase capacity every quarter. And so far, there is no constraint in terms of increasing capacity. We are just taking a step by step. Every quarter, we are just trying to increase.
Understood, sir. And I just have one more question, if I may, please.
Yes, please go ahead.
Yeah. So just in terms of just the overall outlook for 23, we are at now 60,000 sort of a run rate. So is it possible that we achieve this so-called 800 crores or 900 crores of the top line on a company level basis, which we were targeting? Is it something which we believe is achievable?
Yes, actually, so far our budget is concerned, the internal budget which we have prepared, I think it is achievable.
900 crores is
achievable. As of now, but then we can go further also. But yes, whatever you are saying, I think it is achievable. Subject to any specific constraint in terms of RBI policy or something like world level, some emergency, etc. Otherwise, in the normal scenario, I think it is achievable.
And one more thing I would like to add is, if you remember, our first Q1 was not even 30%. This year we have 4 quarters.
Understood, sir. Thank you so much for answering all my questions. Thank you, sir.
Thank you.
Thank you.
Thank you. Our next question comes from the line of Ravindranath Nayak from Sunidhi Securities. Please go ahead.
Congratulations for the good set of numbers. But this again repeating the same question that the previous participant had asked. So last quarter, in the fourth quarter of last year, you have your total MDF EBIT was at 21 crores, and this quarter it is 39. You mentioned that you have given some giveaways to your partner, dealers and retailers for that. But if we see that it is visible that your laminate margin has come down from 6.6% to 5%. So inflationary pressure in the raw material prices was there in this the first quarter. So despite that, this 21 crores to 39 crores, it is around 20 crores of difference. You mean to say it is largely due to the incentive that you have doled out to the retail and the dealers? Or, how can you bifurcate this? How much it has been come from the efficiency, and the realization has remained almost same, CGM basis, it is almost remained same. How this thing has happened? Can you please explain a bit detail?
I can tell you that it's number one, it's not completely because of incentive. Incentive was just one part. Number two, we took certain price increase in last 2 quarters of financial year 21-22. If you remember, my last price increase was somewhere on 13th November 2021. And its effect by the time it was almost mid-June, because we were having some pending orders and everything. So today in quarter 1 of 2023, we are totally working on new price list. While in case of 2021 and 22, there was almost 2 to 3 different price lists were there. And we took all this price increase during this year, last year only. So this is also one of the reasons for this EBITDA.
Okay. But if I see your production in the fourth quarter of 53,729, and this first quarter is 58,745. So if I take the per unit production realization, last quarter and fourth quarter are 26,000 and it is 27,000. There is no material increase in the prices also. So how this EBITDA increase has happened due to the efficiency gain that you mentioned, it is not quite understandable. And second thing, if at all 24% margin we are getting in the MDF margin in the first quarter, then you can, and also you are mentioning that the chemical prices remain stable, it is going to go down also, then you can have a better margin in the entire year. If you are saying that the first quarter is 71%, then the entire year you are mentioning, guiding that 75% utilization will be there. So then if you take the 25% margin on the MDF side and also laminate should be better, then definitely you will be easily getting a free cash flow of around, if capex is not there, 100 crores of free cash flow. What is the necessity of raising funds at 200 crores rupees currently? And secondly, what is your current foreign currency debt? It is $28 million or it is reduced?
See, I think I would like to answer your first question. I think that the margins, the gross margins, if you compare with the last quarter versus this quarter, it has improved by almost 5%. So the consumption and other efficiency improvement is one part. Secondly, as mentioned by him, is the incentive part. Third is like the price rise, which the effect of price rise was reflected in this particular quarter. So, considering all these aspects, I think overall the margin has been improved. I am not saying that the same way I think it will increase further. See, this is like where I think we are going to stabilize here. And over and above, I think what we further can do is like we'll have the value addition composition in such a way where we can further improve margin. But on the other side, there is a risk of other aspect which is not in our control. So overall, what I would like to say is like margin which has increased, is definitely has increased, but the couple of impact which was reflected is a one-time impact. But our, I think, internal goal would be to just to maintain this margin throughout the financial year. That is first part. Second, the purpose of the 200 crore, and once again I'm telling you, the 200 crore is the overall limit which we have got approved in the board. we have not decided for the actual amount for the purpose of right issue. Now, the purpose and the basic objective of this particular right issue is very, very specifically to reduce the date. So we are not going for any other purpose other than this reduction in date.
So what is your foreign currency debt right now?
Foreign currency debt would be out of total, it would be around 30% of the total outstanding debt, approximately 30%. I'll give you the exact figure also.
Is it $28 million?
Just a minute. The foreign debt was total date for just the foreign currency date was basically for Andhra Pradesh project only, and it was from German financial institution. As of now, the outstanding would be around 21 million.
$21 million.
Correct.
Okay. And the rupee has depreciated 4.2% in the first quarter. And how you have accounted for this foreign notional loss of the foreign currency debt, or you have not accounted it for the quarter?
On a quarterly basis, we are just accounting for it. So whatever impact is there, it is already been accounted for.
Okay. So can you quantify in the total out of the 4.8 crores of debt, what is related to foreign currency notional loss and what is it to actual debt interest cost?
I think that I need to just look into figures exactly. We can just give you that figure later on. As of now, I think I don't have that exact figure. But as a normal practice and following the accounting standard also, India is also, we have to just follow the same impact which is being given in the, on a monthly basis also we are just giving the impact. So in the quarterly finance account which is finalized, the effect is already being given. I can give you that figure later on.
Thank you. Thank you all.
One more thing I would like to add is now, last financial year that, there is almost 10 to 12% growth compared to last financial year. It's also one of the reasons for EBITDA margin, because a lot of the costs, which are fixed costs, so when you increase your capacity, it also contributes better EBITDA. This year we have reached almost 161 crore. Last year it was almost 143 crore as long as MDF business is concerned.
Okay. Thank you very much, sir, and all the best.
Thank you.
Thank you.
Thank you. Our next question comes from the line of Krishna S. with Vyas Advisors. Please go ahead.
So thank you for the opportunity. So again, hearty congratulations for a good set of numbers. Am I audible?
Yeah, please go ahead.
So basically many of the questions which I had in my mind have been already answered. So again, a few things remain. So one is that if there is any further foreign currency depreciation in the dollar, so will it impact the repayment of the debt?
See, as of now, the way we are placed in terms of natural hedge, we are already having natural hedge, the import and export, both way we are just covered. But then, yes, if there is a further depreciation, it will have impact. But it is very too early to say the exact impact. But it has to be looked into at the appropriate time. But it will have impact.
Okay, fine. So that is, and the next is that in terms of capex, so further capex. So you have very clearly told that right now at this point in time you have no plan. Maybe in the future you may have. But what is generally the thought process of the top level management in terms of capex? Like how do you think? Like how do you look at the demand and what kind of timelines you follow? Like for example, say if you see that the demand will be much more than the supply in say 2 years time, you would incur a capex today, or whether it is 3 years before, or like how does it work? What is the thought process in the board like?
See, gentlemen, at present we are almost operating at 72% in AP plant, 73% for AP plant. And I think, reaching to 110% efficiency is not a big issue. Because this German technology, they have a very conservative rating. When we talk about 100%, we can reach up to 110% too. So
Okay.
even if we decide to put up a plant today, maybe in a 2 years or 3 years period, we can put up we can match the capacity utilizations. We can add the new capacity. This is one thing. For laminate, we really don't see. I'm talking about what product we are dealing right now. So I'm just giving you an idea. So we have a lot of internal discussions going on for expansion. For laminate, you really don't need more than 9 months. I think 12 months you can easily put up any plant in India.
Okay. For laminate, right?
Yeah. And as such, we are also in discussion for some other products too. But it's premature to talk about those things.
But so yeah, I got your point very crystal clearly. Only thing is with respect to the MDF, suppose like you are saying 2 to 3 years. So suppose for example we will be 10% capacity will be like it will be crossed in 2 to 3 years. So then maybe this may be the right time, or maybe we have another 6 months to 1 year only in terms of to take a decision, right? Or like we can wait more. Like just the broad idea.
Yeah, you can say that. In coming days, if we take, if we streamline our capacity or over capacity, you want to take care of your capacity or extra business or opportunity, you really need to take the decisions in 6 months to 1 year. That's for sure.
Correct. Got it. Again, I would really, I really am like looking at. I have been tracking this company for a long time now, and so hearty congratulations on actually achieving what you had planned in terms of deliveries. So that is again like on paper it is a different thing, but on the floor it has been a good compliance to what has been thought or what has been envisaged. So hearty congrats on that front to the entire team. That's all from my side.
Thank you. Our next question comes from the line of Arvind Kothari with Nivesh I. Please go ahead.
Yes, sir. Many congratulations on a great performance. And I had a couple of questions. One was, sir, that if we look at the overall guidance that has been given by a competitor, I guess there's a confusion because they're guiding on the margins to go down because of some chemical pricing. But that is not being observed in the market because the chemical prices, as you also rightly said, are pretty stable, in fact, are going down. Is it a fear of the price of the MDF itself going down which has led them to guide that the margins may compress going forward?
Frankly, I'm not sure about their answer, but yes, I can definitely tell that in coming days there may be a pressure, but we can easily manage those chemical pricing because simultaneously raw material pricings are going down. So this is one thing. Then second part we can see is we are putting up some resin saving technology things and all. So we are quite a bit sure. And then third thing, what we feel that we have a very good provision that we can increase our capacity utilization to the extent, and it will definitely cover up some of the costs. So I can't say about my EBITDA things and anything like at present, but yeah, we are quite in a good position for sure.
Got it. Sir, another question was that, there has been an announcement by a particle board plant by, even Merino and maybe now Green, Lam Laminates. So, in the discussions with few players, what they were saying is that because the particle board is very expensive right now, the imported one, because the domestic market is facing short supply, that is where maybe the MDF volumes have gone ahead because it is being, even where particle board is being used, MDF volumes have gone up because of the usage in the shorter term. And in the longer term, though they are also planning that the OEM market, as we are also guiding that the OEM market can become very large. And compared to our competitors, maybe we are focusing more on the OEM rather than the distribution. So in the OEM part of the thing, where do you see the opportunity, whether we also would going ahead look at the particle board as a product that we would want to maybe expand, or we are comfortable with, MDF only taking the lion's share of the OEM market that we want to tap?
For your last sentence, maybe I would say we have some discussions going on, so I can't give any comment on it. But one thing is pretty sure, Today, I was just talking to one of the startup business team, and I told them, why you guys keeping option of plywood when you are offering already MDF for your kitchen segments? They say, no, customers still insisting sometimes that they want plywood, so we have to keep all the options. So, putting particle board for the kitchen manufacturing segments or OEM segments is, as on date, bit difficult to me.
Okay.
Because, the consumer perception is not still very strong about the particle board. It has a very different applications. And so we really don't see a great threat of particle board, because MDF itself has its own applications, and yes, there may be some overlapping of consumptions, maybe some particle board market replaced by MDF because of demand supply, but it's not a big part. Second thing is, if you see worldwide, it is like 45-50% is MDF and 50-55% is particle board. So we see there is a huge opportunity for particle board also to grow, as well as MDF also to grow, because 70-80% market is controlled by plywood industry.
Okay. Got it.
I hope I have answered you.
Yes, sir. And on the Middle East, the export that we are doing and the freight advantage that we were talking about, because this quarter has been really good in terms of our export going up. So is it a trend that we are seeing that there's a fair bit of advantage in freight which is sustainable, or it was a one-off that we enjoyed a freight advantage and we exported more volume this quarter?
So actually, we had a good freight this month, and still the freights are volatile. And another thing is, we have our export obligations to be covered. So because of that also, we need to export the certain volume to the market. These were the two main reasons why the export took a substantial growth in this quarter.
Okay, got it. I'll come back in the queue for next question.
Sure, thank you.
Thank you.
Thank you. Our next question comes from the line of Rajesh Kumar Ravi from HDFC Securities. Please go ahead.
Yeah, so just a follow-up, the capex, for this year, FY23, would largely be maintenance and the raise in, improvement capability that you are setting up. What sort of number you are looking at, sir, for FY23 total capex?
Are you just asking for the capex for this financial year, or?
Yeah, FY23 total, ongoing, and this for resin manufacturing and all which you are looking at.
See, the exact number, I think it would be early to say, but I think it would be in the range of 20-25 crore max.
Okay, this is total including maintenance, right? And secondly, as you mentioned to one of the participants, particle board is one market which is exciting, looking exciting. And so, if at all you're doing anything, would it be organic or inorganic, or because most of the particle board capacities, older capacities would not be really efficient?
It has to be a very well organized plant. If anyone wants to play in particle board industry, because if you go with the unorganized supplier and thing like that, and there's no capacity, then you will be not able to sell as a premium product.
Correct.
In a very organized way, you have to enter into. Like, I believe that 2 or 3 players are entering in this market, and they have a similar approach.
Okay. And any thought on expanding your laminate capacities?
Sir, we have all internal discussions going on, because our core competence is panel industry, so we are definitely having a discussions for certain plants. But as on date, we really don't have any answer for that part.
Okay. Just last question. You mentioned it would be a rights issue. So in that case, is it fair to assume that the management will be participating in equal proportion of its shareholding, the promoters?
Yes, as of now, we are not decided, but I think yes. Normally it is yes, so there's no other reason for not to participate.
Great. Great, sir. Thank you. All the best.
Thank you.
Thank you very much. Ladies and gentlemen, in the interest of time and fairness to all participants, we request you to limit your questions to 2 questions per participant. Our next question comes from the line of Ankur Kumar with Alpha Capital. Please go ahead.
Hello, sir. Congrats for a great set of numbers, much better than our peers. So my first question would be, how is the demand shaping up in Q1 as well as in July and the August month? How is the demand shaping up for the industry?
As such, in month of July, you have a lot of marriage and festive season, so July was not very strong enough. But now we believe that August it will pick up.
So do we expect Q1 type of volumes to continue for the coming quarters?
We are struggling hard, but I don't see any reason. Yes, we can easily. We have to maintain certain of things, and we are working on that part. So let's see, because it's just only July only finished. We have August and September to go.
And sir, our value-add product is still quite less, as in because of our new plant. So any guidance for that for the full year?
Yeah, because to distribute our value-added product very efficiently, we have put up two distribution point. One is in Bangalore region, another one is North Delhi, and we have also appointed certain channel partners to take care of this thing. So we expect a good volume in this quarter.
Sure, sir. And my last question would be, Century is coming up with its capacity in the South region. So any worries on margin front from that angle?
As of now, if we consider the timings for Century also, it is going to take at least 1.5 years to 2 years for them to enter into the production stage. So for this coming 2 years, no, we don't see any threat.
So the Century, I believe, has some capacity in September, October also planned.
Yeah, that
is in north. That is a brownfield project, not a greenfield.
That's in the north part, so we are not.
So that will not affect us.
Yeah, and second thing, as I said before, there is always a demand is all simultaneously 15 to 20% increasing, and when we are adding up certain capacity, maybe in a short period or maybe in little time it absorbed easily. If you see, just I'm giving you our company's example. We started this plant and now we are running almost like 75% capacity. And we are easily doing this business in Indian market and other people, so are others. I mean, they are also doing the same way. So I think it can be easily absorbed for sure.
So our current margins can sustain is what you're saying.
Because, still Indian market's demand is not yet reached to the mature level. It's increasing day by day.
So the Q1 margin can sustain is what I'm trying to get, sir.
For margins, I believe that we have to see this financial year, as I said, that we have reached only July month. So we are now working on. But as I said, we have a lot of good advantages in this margin. We are quite positive. Raw material cost is quite under control or maybe going down. Then we are also see some resin saving things and a lot of things.
Sure, sir. Thank you and all the best.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time and fairness to all participants, we request participants to limit their questions to 1 question per participant. Our next question comes from the line of Rishikesh with Robo Capital. Please go ahead.
Sir, thanks for the opportunity. So my first question is, if you could provide us EBITDA margin guidance for FY23.
See, as I said, there is a substantial growth in terms of EBITDA margin compared to last year before. In terms of MDF you are asking or overall you are asking?
Overall, sir.
Overall, see, as I said in the initial speech only, that 2021 it was 10%, 22 it was almost 12%, Q4 it was 16, now Q1 23 we are sitting on 22.55%. Due to this trend, the way we are positioned as of now, I think we'll be able to maintain this margin 1 or 2% here and there. But I think if you are asking for the year as a whole, financial year 2023, we are just trying to be maintaining this margin of 23%. But overall, I think it should be in the range of 20-21. That is what I think we are trying for.
Okay. And so what was the value-added product realization for this quarter?
From value-added product, our average realization was almost 36,150. And from AP plant, it was almost 34,314.
Okay. Thank you.
Thank you.
Thank you.
Our next question comes from the line of Nirvana Laha, an investor. Please go ahead.
Hi, thank you for the opportunity, sir. My question is, what is the proportion of volume sales that we have in West region where Greenply's plant is coming up with?
Next 2 years.
Hello?
We didn't get your question clearly. Can you repeat, please?
Am I audible now?
Yeah, please.
Yeah. So my question is, what proportion of our volume sales come from the West region where Greenply's plant is coming up in, I think, the next couple of quarters?
So we are planning between 15 to 20% for West region, and Southern region is almost 40%. So on an average, East, West and North is more or less 60%. So 55 to 60%.
Okay, so West is around 15 to 20%, you said?
15 to 20%, 20% almost.
Okay, and after this plant comes up, the Greenply plant, how do you see that evolving? Do you see a threat to the realizations there or the volumes there?
As I said before, by the time we also expect a lot of increase in capacity, in demand also. So we see that yes, for short term, there may be some problem in market, but then it will be easily absorbed in the market. So we really don't see any problem in terms of growth and other stuff.
Okay, got it. And can you give us the figures of overall, FY22 industry demand and the capacity that is available as of FY22? Or
I think it was a capacity available was almost like 2.3 million CBM per year. And I assume that capacity utilization was almost like a 1.8 to 1.9 million CBM.
Okay, so around 75% capacity utilization.
75% to 80%. A lot of like our plant, it was practically started at 70% or 65% capacity in second quarter of 21-22.
Right. And you believe that with this, I believe between Century and Greenply around 6 lakh to 7 lakh capacity is coming up. So you believe that the 75% utilization level will remain in spite of this capacity coming up in the next 2 years?
Yeah, because it's a very simple logic. Assume that if we talk about 6,200 CBM and if we add 15%, so it's almost like 900 to 1,000 CBM additional demand, and that's the capacity they are putting up.
Okay, got it. And last question from my side, there is a 600 basis point gross margin expansion this quarter compared to last quarter. So what do you attribute the gross margin expansion to, and can we have 55% gross margin going forward for FY23?
Yes, there is as I said, reasonable good increase in terms of gross margin. So as of now, there is no point that it will reduce. So we'll just try to maintain this margin in the coming 3 quarters also. Because it is a purely improvement in terms of consumptions and efficiency part in the factory level.
Okay, thank you so much. That answers my question, and wish you all the very best.
Thank you.
Thank you. Our next question comes from the line of Sarvesh Gupta with Maximal Capital. Please go ahead.
Good evening, sir. Sir, first question on the debt reduction part. So, because your CapEx is like 25 odd crore this year, so given the 200 crore sort of EBITDA run rate or 190 thereabouts, you will have like 150 odd crores of, EBITDA, and then, you are generating 200 more crore through rights issue. So are we planning to pay down the full term loan, because then only working capital loan would be remaining for us in a way? So that is question number one. And secondly, I could still not understand, if our guidance is not on price degrowth at the finished good level, and then we are not foreseeing any RM inflation. And given that we want to increase our value add quarter on quarter and capacity utilization also increasing quarter on quarter, so why should we see any dip in the, why should we not increase the EBITDA margin guidance going forward? And are there any export incentives, one-time, one-offs, which are included in this quarter's EBITDA? So these are my questions.
Okay, coming to the first question, as I mentioned earlier also, I think in the initial speech only I had confirmed that as of now, we are just following the schedule which is there in terms of debt repayment. If you go by current year's figures, for this particular quarter we have paid almost 15 crores, and remaining 3 quarters it would be additional at 35 crores. So total, I think we are just planning to repay 50 crores. Now, the way we are placed at the starting of this year, the total debt was around the balance sheet, I think, 286 crores, right? So, right issue, as I mentioned, it is purely for this purpose, but we have not decided the exact figure. And out of this figure, I think 25% would be for the general corporate purpose, and the balance amount will be utilized for the purpose of repayment of debt. So as of now, we don't know exactly. And third, I think that rightly you suggested that the way we are placed in terms of EBITDA margin in the quarter one, if we can continue, we can further look into additional repayment of debt. But then this is too early to say on that part. So as of now, we are planning for 2 things. One is the other two, that repayment schedule, that is first. And secondly, we'll decide for the exact amount of right issue. And after that, I think the balancing amount will automatically come to us, that what is amount available for repayment of debt. So far as the margin other part is concerned, I think if this goes well, yes, there is a 100% scope that will have a better margin than what we are just having as of now. But again, I think this will be known maybe after end of this whole process of right issue. And I think as for the normal process of right issue, if we can just say that this is the starting point, then it will take at least 4 to 5 months, or maybe 3 to 4 months at least. So we will get exact idea maybe in the month of October or November, by which I think we'll have a better clarity. And at that time, we will look at the margins which is available for second quarter and way forward. I think then and then we'll be able to give you the exact guidance.
Sir, on the export incentive, if any booked in this quarter, like are there any one-offs that we have earned because of the exports?
As of now, for this quarter, yes, we have already considered whatever export benefit which is available. And as per the accounting guideline, if it is already approved, then it is already considered, yes.
What will be the amount, sir?
Amount would be, I think, in terms of lower digit crore. Exact amount I need to just check.
So around 5 odd crore?
I don't think so. It would be less than that. It would be hardly 1 or 2 crore.
1.15 crore.
Okay, exactly, it is 1.15 crore.
Okay. Thank you, sir.
Thank you.
Thank you very much. Ladies and gentlemen, that was the last question for today, and I would now like to hand the call back to the management for closing comments.
I would like to thank Rushil Decor team for their untiring effort, hard work and dedication. I would appreciate you all for participating in our conference call. In case of any query or question, please do get in touch with our IR team. Thank you.
behalf of Asian Market Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.